What's going on, everybody? Welcome back to another weekly market update. Is every Sunday or Saturday, depending on the week, we go over the market, where we're going, what's going to happen, is it bear market, is it bull market, all the questions you might have, we're going to be answering here, as well as some trades for the next week. So, make sure you watch this whole video because I promise you guys these videos are very key for you, one, to learn technical analysis, and two, to know what's going to be happening next week. This has been a crazy market. As you guys can see, it's been up, down, a lot of volatility. We kind of been predicting the market quite well lately. So, make sure you guys watch this whole video. And if you learn more about the stock market, the crypto market, Bitcoin, got a really good video coming out later this week about Bitcoin. Make sure you subscribe to the channel, leave a comment, leave a thumbs up. It really helps out pushing out this video. So I appreciate you guys for tuning in every week or whenever we have a video out. So let's go over S&P 500. We are here on the micro chart on the weekly. Let's zoom a little more in. Still kind of in the middle, trying to push above this long-term macro trend right here. But we got rejected on it last week, which we had spoken about. So let's zoom more in here. So we saw last week, we predicted last week that we were going to get a red day into the red week into the market. First, we saw this candlestick here, a bearish candlestick, inverted hammer. Then we saw this past week, which as predicted, we saw this red week. We got rejected on this trend that we had up. So this pretty much overshot here, this overshot up here, past the top of the bull trend from 2008. We tried to break through again, rejected this week red, and most likely I think we'll be heading around this 425, 430 region. As you guys can see here, was a bottom on this small pullback here. Was a bottom around here. This is around 430 mark. We'll see a little better on the daily time frame as well. Now, on the weekly time frame, we did find support here on the 50 MA, on the moving average. So that's where we had this strong bounce on the weekly time frame. Now, if we zoom in a little more and we take a look on the daily time frame, let's fix this up. As you can see, we got rejected and we overshot this. We overshot this strong resistance, this double top that was kind of predictable almost, because so many people were looking at this to short. The market kind of always loves to do unpredictable things. So we actually kept up above it and kind of had a fake breakout up here. So probably a lot of people were thinking, we get above this resistance, we're gonna push for the all-time high. But actually, there's a pretty strong bull trap up here, the market got rejected and came down again. Now, we have the 100 MA that we're crossing below, and then we have 200 MA that the market just can't seem to get over this past week. It's been the number one point of resistance. We closed right under it, and what we really don't want to see if this 100 MA really starts crossing below this 200 MA. So if you're feeling bullish, you really want to have a green week this next week, because if you don't, we want to be getting closer to that crossover that might signal death cross and really push down. Also, another thing to keep in mind: a lot of times during a bull run, when you have a pullback, a death cross signals the end of the pullback. So a death cross of the 100 crossing to 200 could be a beginning of a bear market, or two, it could be the end of a pullback during a bull market. Personally, I don't think we're going to be heading into bear market right now. So what I be looking at to see if we do have another red week and we find the support around this 430 area, and maybe like we spoke about, this inverse head and shoulder type of setup, and maybe we get that death cross that traps in the bears. Maybe the bears are like, okay, we got a death cross, we cross maybe a little below this level, thinking it'll go down, get a little head fake, and push up, kind of like we saw up here. You gotta really, when you're trading, you really gotta be careful of these bull and bear traps, because the market loves to do those, right? So that's kind of what I've been thinking about right now that could be happening. The FOMC meeting, I believe the FOMC meeting will probably be the bottom of this kind of next leg down, and we saw very similar how the FOMC meeting was the bottom of this pullback down here. I think very similar, we might see that, as long as the Feds don't come out and mention something crazy that they're gonna do. As long as they stick to what they've been saying, most likely I think we'll probably see a bottom around there. Now the FOMC meeting won't be till May 3rd, so be around this date right here. And I think until then we'll just have maybe a slow kind of pull down. The market has been very volatile. There's no a clear direction at all, and we saw that during the week. Big green day on Monday, huge red day. We shorted really heavy. We had a really amazing week last week, guys. If you're not in the chat room, hit the links in below. Get in the chat room. I promise you guys, it paid itself tenfolds, very easily. We had a massive short positions on Tuesday, which paid off very handsomely, and we literally actually held most of ours for this gap down here for 44, where we found some resistance, and the market was just kind of a little choppy here at the end. And you could even argue this. We filled this little gap right here that we created intraday. You could even argue this may be a little, bear flag. Kind of the pole. So we might be looking for a breakdown there. So for next week, I'm expecting some a slightly red week, probably something similar as we saw this week. Overall red, but not like massive red like we saw early in March. Like I said, the market right now is waiting for the Feds. What are they going to do? Are they going to stop inflation? As long as inflation doesn't get stopped, the market most likely won't be able to push hard. And the main reason is because the Feds, unless they don't care for inflation and they care more about the market, which I don't think they do, they're kind of putting themselves in a position that they care so much about the market for so long that inflation is so high that they need to fix the inflation problem first. Right now, there is signs of a recession. Is the Fed's going to have to slow down because they're scared of a recession? That could be another option there. And everybody's just kind of waiting to get those answers to see where the market is going. Now, if we do get you know 8 rate hikes or 9 rate hikes, like we might like they might have talked about, I just don't think we're going to be able to see an all-time high for that. I think if that's going to be the case, we're going to chop down and probably head into bear market right away. Now, if the Fed is able to uh, not they're not do as many as they're saying they're going to do, then or as expected they plan to do, then we'll probably see all-time high. Regardless, we're at the end of the bull run. End of bull runs usually have massive potential of gains, like we've been expecting. This inverse head and shoulder push up to in the 500, somewhere around 5.1 to 5.10 maybe, and then go into the bear market. Maybe even going to 530s potentially, and kind of going to the bear market later this year, maybe about November, December. Q4, heading to Q1 of next year, and we see that oftentimes like right before the bear markets, we see a strong rally. For example, if we go back to 2020, we see that a lot of people are calling for a bear market heading into this area. Then strong rally, and then boom, headed down. And we see that pretty oftentimes. If you go back to in 2017, we had the big drop over here. In 2018, we saw that. If we go to the 2008, we can see that as well. If we just let's zoom in on the weekly time frame real quick to get a better kind of micro side. We go back to 2008, very similar. You see that we had a big drop, and a lot of people were calling for the bear market around this area. We had one last leg up. Same thing here in 2000. We had this big drop in 99, one last leg up, and then push up. So we might be seeing something very similar to there. Also, another thing I want to talk about is going to be the inflation rate. So this is the chart of the inflation rate in the United States. The US Bureau of Labor Statistics chart. Right now we're sitting almost, if we go to our 25-year chart, near the whole-time high level. If we zoom out to back to the 30s, 50s, and all that jazz, the 80s really was a strong inflation area. Was not, it doesn't look as bad, but for the last 25 years, highest it's been in the last about 50 years since the 80s. So the market, the Feds won't be able to help out the marketing as much unless they see a top, unless they see a topping point, in here, and the PMI will be able to kind of forecast that when we might see a top. So I think once they be able to see a top here in this inflation rate chart, then they might be able to cool off, and if that comes maybe sooner than expected, they might be able to help the market push one leg higher. Before we head into recession, the Feds try to help usually before a recession, try to avoid it, but oftentimes they can just delay it out, like we did see in 2020 when we had a crash. More than likely, everybody was expecting a bear market. Then the Feds came in and kind of saved that, but then they created this huge inflationary environment. So we're definitely gonna be heading into a bear market at some point. Like I said, we're predicting later this year, around November. Q4. Let's just call it Q4 of 2022 into 2023, and the only thing that I can see helping right now the market will be if the Feds, might find some signs of inflation slowing down. If that's the case, then they might be able to help it push higher a little longer, but eventually it'll have to come down at some point. Now let's take a look at some of the places we talked about last week. First of all, let's take a look at some of the plays we talked about last week. XLRE was a play that I told you guys that you had to keep an eye on coming into this week. And what did we see? Right? Just strong overall, stronger than the rest of the market. Push up, really strong on April 6th, the whole week. These tickers are the funds. What you want to trade is the top holdings of these funds, right? So we go over the whole overall state of the market. Now you want to trade the top tickers in these funds. For example, XLRE, you can go Google, look up top holdings, and boom, right? Now another one that we kept an eye on, XLE Energy, and now looking at it's breaking out this kind of ascending triangle they created. The only thing that be of a warning sign here to see some extension is to make sure we don't get a double top here around 80, but this definitely has a look that it keeps going up. We did have a couple swing positions on oil, and OXI, XOM, those type of tickers, and those are some of the top holdings in this energy fund. While the whole, tech market, the tech stocks and communication stocks have been struggling, these have continued staying strong. If you go to XLU, utilities, looking like it's kind of wanting to top out here. It's been strong, and it's a ticker that we talked about. As you can see, it's been just very very strong. But looking like it might be topping out very soon. Looking for a pullback, maybe here in the mid 74s. Maybe you could go even lower to 72 if you really wanted to. But it is one of those tickers that looks like it's going top high. Like Walmart, kind of same thing. It's been so strong and aggressively strong. A lot of people are moving from risk on stocks to risk off stocks. So cash flowing stocks are going to perform well in this market environment. I'd be looking for maybe a pullback here. I would love to see that for this to keep kind of going, kind of the previous all-time high level breakout here around 153.5. If we can get a retest, that'd be amazing. Another one that I got my eyes on, if we go to Costco, very similar, strong breakout. If we, if we get a retest around 585, that'd be amazing. If you go to XME, mining ETFs, if you go to XME, it's kind of has a utilities has the look of what XME had. Remember when you guys remember this? We entered XME, we re-entered up here, strong breakout. I mean, this has been just a beautiful trade. XME guys, if you've been in XME, if you follow the page for the past month, this has been just a just amazing trade. Now XME looks like it's getting ready for another blast off. Potentially could be a blast down. It did have a double top here, but it's contracting, staying high and tight. So stocks go up, contract, go up, contract, go up, contract, right? So we're gonna be looking for a break either above 64 or a breakdown of the close around below 60 for maybe a short down to 53. So I got XME really high on my list. I do have a silver swing. Silver is been looking to me better than than um, than gold is right now, kind of forming this falling wedge pattern here. I did enter an early swing with a few weeks out on silver. Hasn't broken out just yet. I might have been early on this trade, but I am looking for this gap fill around 23, 24. The stickers do move a little slower, but we did find some really great support on the 50 MA, cross below both the 100 and the 200. This MA is just looking like they want to curl up and help silver kind of have a leg up, which it had a strong breakout, but nothing really massive. And it's been consolidating here, real tight, beautiful, falling wedge type of look. You put this as the flagpole. You you know you you might look for 26. I don't know exactly what the percent is for the flagpole, but this is a 20% move. If we point out our 20% move from around the breakout level here, might give us that near the whole time high type of push. So that I'm early on the trade, I'll admit to it, but I bought a few weeks out some contracts, so I'm feeling pretty good about this. If you go to gold now did break out. Looks good as well. We spoke about this breakout. I told everybody, if you watched last week's video, watch for this breakout. It's gonna break out. It might be good. So this I might look. I've not gotten into gold, but might look to get in if we do get a retest. Fix this top area right here. I would love to see a retest around 180. Then I'll look to get in and kind of go for that gap fill here. If we see some continuation going into next week, I might just chase it a little bit and get in for some shorter time frames trades on it. But definitely something we'll be looking at. If we go to Finvins and we go to our groups, which we spoke about keeping, you gotta keep an eye on this, guys. You gotta keep an eye on this when you're trading to set you up for the next week. See what the strong performance sectors have been, and follow the money. And these are again the same, most of the same that we talked about last week that were strong have again outperformed again. Energy, financial, basic materials on the last day. If you go to the weekly, healthcare, consumer defensive, energy, 1 month. We see technology, community com services, industrials, really struggling behind everything else. And in the 3 month, it's not even close, right? So, keep an eye on this energy. It's been strong. Keep an eye on the financials. Financials have, it's not something that I've been really liking that much just yeah they've not moved great, even if they had a pretty decent week. It's not really something I'll be looking at just yet. We did talk about this inverse head and shoulder, and I don't think I'll be taking really much trades on it until we get this breakout above this inverse head and shoulder here on the financial side. Now let's take a quick look at the triple Q and the IWM. Triple Q again, so much weaker than S&P 500. Keep in mind, guys, S&P 500 is always going to be better than triple Q. Why? Because they hold healthcare, they hold real estate, they hold all these other things that the triple Q doesn't. Triple Q tech. So even if tech is doing bad, of course the S&P 500 don't like that. But if healthcare and energy and real estate, consumer services are doing well, it's just going to hold up much better. So that's why we've been taking triple Q shorts a lot more than S&P 500 shorts. They just pay better. See here, terrible. Here to look at 100, rejecting 100 twice, rejecting it to 100, 100 across the middle of 200. Has a massive gap here, which has not filled. But we might look to fill it maybe next week. I told everybody that we did a midweek market update last week, and I told you guys this was not gonna get filled. The S&P 500, I said it was gonna get filled that gap. This one wasn't, playing out again. Triple Q, am I looking for 338 as well? We might be able to get that inverse head and shoulder set up. But definitely looking weaker. Currently has some support on the MA50 on the daily. If this kind of crosses below, we could probably definitely see a move down to 340 at the very least. I'd be expecting. IWM not looking great as well. This has pretty been easy short. We talked about it last week. Short from this resistance into here. Ugly bull trap here, rejecting on the 100. And those are the little head fakes that warned you guys about even earlier. I was like, be careful, because when you think things have broken out, you need to see for the confirmation. A lot of times, if you chase the breakout, you're gonna get burned. And the reason being is the market just loves to fake you out on these breakout levels. People are like, oh wow, broke out above this resistance, we're gonna go to the moon. No, boom, red day right after. And even if you did have some pretty strong volume, don't let the volume trick you, because a lot of times the volume can be people loading up on the short. And, if you look on the way down, also had some increasing volume. So, just be careful out there when you see this breakout. Now, IWM really strong, going kind of this really strong support zone. Might look for a bounce play to fill this gap here, 202, before lower. That's kind of what I'd be expecting. I wouldn't be, I'd be a little surprised if it does just break through all the way down here. And I've talked about if this breaks through, you can look for a rebound to 100, and if finally closes below 190 and below this double bottom level here, 187, I just don't see how it's not gonna fill this gap here, 165, 170. Again, while the S&P 500 does look strong, the IWM and the Triple Q hold a lot of stocks that you guys love, a lot of mid cap tech growth stocks, but they're gonna be struggling behind it. So we just gotta be careful about that. Follow the money, guys. Go to the groups, look at the daily performance, the weekly performance, and try to just follow the money. I told you guys how to set up your watch list. You wanna have all the different ETFs for the S&P 500 intraday, and have it on your watch list, see which ones are performing, and stick to those unless you want to short. I don't really stick to those. I gotta be honest with you guys, I stick to mostly tech. I stick to tech because I'm not scared of shorting. But if you're scared of shorting, don't stick to tech. I'm happy. I short is happy. I rather play tech because it moves better for me trading options than a lot of those other tickers do. There's a lot more um, options activity in it. So I stick to tech. I just go to the short side because I'm not scared of shorting. So this overall still feeling pretty bearish. Um, the triple Q, you really want to see a rebound here, guys. If we just fall through, we might go even lower because I want to see a MA50 bounce here. I want to see a bounce and fill this gap. You gotta do it if you're the bulls. You gotta do it. You can't let you can't just roll over and lose. Here we fill this gap, and I told you guys we will fill it. I told you guys not right away, but we fill it towards the end of the week. We had the mid-market update on Wednesday. I said Thursday we tanked down, and then end of Thursday into Friday we recovered up, but then we kind of sold off a bit after filling that gap. So I told you guys that was coming. Uh, Still, target is around this 426, 430 zone right here. Might be slow, might be choppy, kind of leading into that May 3rd meeting. Lastly, let's talk about volatility. Volatility, we had this bounce. As long as volatility is in this red box, market will be dangerous. Up a lot of up and down. We see it intraday. We see big sell-offs intraday, huge reversals, huge sell-offs again. That's because there's high volatility. We did bounce on this trend line, making these higher highs, higher lows. We did make a lower low here, but we did bounce on the trend line, so volatility is still trending up. And this first bottom down here was formed by the Feds announcing they'll be tightening their monetary policy. So as long as this trend is up, we gotta be careful. We did get rejected on MA 100 here, but did we find support on the 200? So we'll have to see where the volatility leads us into next week. And that's all for the stock market update. Keep your eyes out on the strong performing tickers: oil, energy, consumer, healthcare. Might see it rebound into tech next week. Hoping to feel like up. That's kind of what I'll be looking out for. So keep an eye out for tech potential rebound. It's gonna come at some point, I believe. So other than that, let me know in the comments below. What are you trading next week? How was your trading week? If you want to learn about the stock market, the crypto market, we also have some courses. Check them out in the link down below. Join us, trade with me live every single day. Yes, guys, I trade every single day, live entries and exits. A lot of people don't do this. A lot of people just do make weekly videos and make money off YouTube ads. I don't do that. I actually trade live, post my trades, trade with our premium group every single day. I don't just post a weekly chart and tell you guys kind of the things to look out for. I put my money where my mouth is. I trade live, and make sure you check us out. And as always, peace.